Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 21st of March 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. Just a few points to flag here. First of all, euro, dollar and cable. Both of these pairs seeing gains in the European currencies and both the European currencies able to hang on to those gains. This despite the fact that dollar index itself has traded back above 90 and sits at 90.26 shortly before we recorded the video. The dollar has lost ground, however, to the Canadian dollar, which has improved by around 0.38% over the last 24 hours, perhaps on easing concerns over trade tensions, but we'll have to wait and see as that story develops. Moving on to what's on the calendar, events that may move the markets today. A pretty crucial day today as far as monetary policy and central banks are concerned. Just to flag, we have a non-monetary policy meeting of the ECB today. Then at 9:30 GMT in the UK, we will have average earnings, claimant count data and unemployment rates for the UK for January. We also saw inflation data out of the UK yesterday, and sterling stayed pretty strong on the back of that. A drop in inflation, of course, we saw then. How will the unemployment numbers look, and what will wages look like? And we have some more about UK wages a bit later in the video. At the same time, we'll also hear from the government about the public sector net borrowing requirement for February, building on what the Chancellor Philip Hammond said about government borrowing in his recent spring statement. Then to the afternoon and to the States, 1400 sees the release of existing home sales data for February. Of course, the US housing market under scrutiny at the moment as mortgage rates rise and building seems to slow. Then at 1400 as well, we'll have the Swiss National Bank quarterly bulletin. How has one of the world's most aggressive central banks performed over the last 3 months? 1800 and the real meat on the bones. Jerome Powell's first FOMC meeting as the new Fed chair. We'll have a speech from Mr. Powell. We'll have the Fed's monetary policy statement. We'll have the key data point, the Fed's interest rate decision, and at 18:30 that'll all be followed by a full press conference from the FOMC. Markets expect a 25 basis point rise, but will be looking for hints about the future pace and rate of rises. At 2000, if you're not all central banked out, we will hear from the Reserve Bank of New Zealand as they make their own interest rate decision and present their rate statement. Right then, breaking news and comment that's caught my eye overnight. First of all, ratings agency Fitch has confirmed China's A+ rating, but has sounded a note of caution over rising trade tensions. Speaking of trade, Thai exports rose by 10.3% in February, above forecast but down on last month's impressive 17.3% read. And it was a similar story for imports from the country, which were up 16% versus a prior 24.3% read. Meanwhile, returning to UK wages, UK health service workers, NHS workers, and there are some 1.5 million of these, are in line to receive a 6.5% 3-year pay deal, says the FT. And if they do get that, that will be breaking a pay cap that's been in place since 2010, and will say a lot about the future path of wages here in the UK. Right then, food for thought, something to take away with you into the trading day and beyond. And why not think about this? Ahead of today's FOMC meeting and interest rate decision, it's interesting to contrast the relative positions of the Fed and ECB balance sheets. And at more than 40% of Eurozone GDP, the ECB balance sheet is nearly twice as large as that of the Fed, who, after tonight's meeting, could be one step further down the road to normalised monetary policy. The blue line here is the size of the Fed's balance sheet relative to GDP, or as a percentage of GDP, and the white line, the similar figure for the ECB. And you can see a big divergence now beginning to come into play as the ECB continues to expand its monetary policy, whilst the Fed is very much down the road of tightening. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of the products for you, then please contact your Pepperstone account representative.